When copper outperforms gold, like in 2013, 2017, and 2021, it tends to line up with the steepest parts of Bitcoin's bull market. This move in 2013 lined up with a 10,000% parabolic rally on Bitcoin in just 1 year. This one in 2017 with a 2,500% surge in 14 months. And this one in 2021 with a 600% move and up in only 10 months. On the other hand, when copper begins underperforming, like in 2014, 2018, and 2022, it systematically aligns with bull market tops for Bitcoin. Each time, Bitcoin collapsed by 70 to 90% as it entered a vicious bear market. Since 2023, the copper to gold ratio has been trending lower, but Bitcoin has actually been grinding higher during this period. We saw something very similar back in 2019 and 2020, where this ratio was still falling, but Bitcoin still grinded higher. But once the ratio bottomed and started to turn up right here, that's the moment when Bitcoin's momentum accelerated and price went parabolic. So the most aggressive phases of Bitcoin's bull runs have tended to begin right as the copper to gold ratio bottoms and starts curling higher. We also saw this here in 2016 and here in 2012, and we think that there's a real possibility for such a scenario to play out in 2025. In fact, the ratio is potentially telling us the precise date where the probability of a Bitcoin top increases substantially. To understand why, let's replace the chart of Bitcoin with the US dollar and zoom out. We can see that there is a clear inverse relationship between the dollar and the copper to gold ratio. Moves up in dollar generally coincide with moves down in the ratio, and moves down in the dollar coincide with moves up in the ratio. For instance, between 2002 and 2005, the dollar weakened significantly, and during that same period, copper outperformed gold by nearly 50%. And from 2014 to 2016, the dollar rose, coinciding with copper underperforming gold by 20%, of course. There are short periods where the two can move together, like in 2012. But these stretches usually resolve with the two diverging again. That's because the dollar plays a major role in shaping global risk appetite. When the dollar strengthens, it tends to tighten global financial conditions and slow down growth, so investors move to safety, favoring gold over copper. But when the dollar weakens, liquidity improves, growth expectations rise, and capital starts rotating back into risk assets, causing copper to outperform. Right now, we believe the dollar is more likely to weaken from here, especially as Trump is pushing for lower rates while simultaneously ramping up deficit spending. That combination tends to pressure the dollar lower and is something we've already laid out in more detail in a recent video. If that scenario unfolds, it could be the catalyst that drives this copper to gold ratio higher. And as we've seen, when this ratio begins moving up, it tends to mark the start of the most explosive phase in Bitcoin's bull run.